Right, I think it's 2 minutes past. I think we shall get started. People will continue to come through. I think we know what it's like. You get the first sort of 5 minutes where people are joining. So we'll have someone there, Jill, who'll be welcoming people in. But if I get started, so welcome everybody to our webinar today, which is all around the subject of vulnerable customers. You've got myself, Sarah Palmer, Distribution Director here at TML. Bit of housekeeping before I then move on to introduce others. We are recording today's session. You probably would have seen that pop up when you first entered in anyway, but just to make clear, we're recording the session and we will be sharing the session afterwards online. We've put this in till 12 o'clock, so we've got some good content to go through, but we would really like to answer as many of your questions that you might have as we work through. So, so what we'll do is if we ask you to get in the chat box, put your questions in there, we'll be able to monitor the chat box, and hopefully a lot of those questions will be answered through the content anyway, but we're bound to get some questions that we need to then also address separately. So if you get those questions going in the chat box, and we'll endeavour and do our best to make sure we get through those. So today I am joined by Scott Callahan, who is TML's Operations Director. So Scott has been really heavily involved in the working groups that we've had in the lead up to, you know, all the good work that's happened around vulnerable customers. So really, really happy that he's joining us today to answer, well, to come in with some examples a bit later on, but also to answer some of those specific questions you might have. Welcome back to Robert Sinclair, Chief Exec of AMI. So we all know that Rob is a huge support to lenders and intermediaries alike. So we're absolutely delighted and very grateful that Rob's giving up his time for us today. We ran a session back in May now on the whole subject of consumer duty, which Rob supported, and that was just ahead of the implementation. And some of you who are on this today may well have been on that session that we ran. And so welcome back, Rob. And thanks again for giving up your time. I can hardly believe it's about 8 months ago now. So the time has literally flown since we implemented consumer duty. But by no means has the consumer duty conversation stopped since then. So very much across the industry, we all remain heavily focused on those principles and good customer outcomes. And one of the subjects that we hear quite a lot of differing experience and knowledge on is that of vulnerable customers, and that's where we felt, you know, this would be a really good, useful session to run and to bring AMI into the conversation. And I've talked about it myself with trade bodies such as AMI and with IMNA, and it's clear to me and others that more education is required on the subject. So today we'll discuss what is a vulnerable customer, what does the regulator expect, and what support TML and AMI are offering brokers and customers, and what else can you be doing, you know, to support your customers. So please, as I said earlier, get in the chat box, get your questions in there. We have the benefit of having Rob Sinclair for the next hour, and that is hugely valuable. So I would say let's, you know, make real use of that. You know, any burning questions you have, we'll get those answered. Okay. So, oh, sorry, I went a bit too quickly there. What is a vulnerable customer? What are the characteristics of vulnerability, and what support and how to support customers who show those characteristics of vulnerability? So to start off then, what is a vulnerable customer? So these are, you know, FCA definitions. A vulnerable customer is someone who, due to their personal circumstances, is especially susceptible to harm. The FCA expect vulnerable customers to experience outcomes obviously as good as other customers and receive consistently fair treatment. Displaying characteristics of vulnerability may result in them having different or additional needs that may impact on their ability or willingness to make decisions. And obviously we're all committed to providing that level of care to customers that's appropriate, giving the characteristics of that customer, that individual. So I just come to Rob with, Rob, what have you been seeing with regards to the knowledge of what is a vulnerable customer and how to spot those signs? Because this is where I hear some real differing opinions on the level of knowledge. What have you been seeing?
Right. If I start this with a view that says this is a journey. So the vulnerable customer issue, the FCA raised many years ago, particularly through the Financial Lives Survey, where they began to isolate a range of areas where they felt people might be vulnerable, whether that's a health issue, a life event issue, a resilience issue, or a capability issue. We've had this issue around for a while as to what do you do, or how do you identify that, and how do you record it? Consumer Duty takes this to a different level, because what they want us to think about is not just record the fact they're vulnerable, but how do you adapt your process or your practices in order to help that customer through that identified vulnerability, and very much asking them how they want to be helped, as opposed to you imposing your solution to that on them. So those two things are really important. The challenge I think we still have is that we've not, across the industry as a whole, developed the right measures and structures to record advisor level and pass that to lenders at their level in a way that's consistent. And I think the piece of work that's outstanding is really that we need to find a way where we get to an understanding that says, how do we record this? How do we pass it on? And have we got confidence that the person getting that information then will deal with it in a way that doesn't damage or influence the lending decision that might be in the pipeline at the same time, which I think is a then debate about, do you advise that vulnerability on application, or do you wait until after the offer? And how do we manage that process? So there's lots of nuances, I think, and we probably have to have a lot more conversations as we go through the next period of time, because the FCA has always said this whole consumer duty and vulnerability issue is a journey and not a destination. And therefore, I think we're still in that space of probably still actually getting from B to C as opposed to anywhere near Z. I think you're muted, Sarah.
Sorry, we have to keep remembering to unmute each time, because we have to mute the whole group, otherwise we get the background noise that we just got. Yeah, just going back to what you were saying there about declaration to the lender and what that means. So when we did a bit of research, I'll talk about it a bit later on, but we did a bit of research as to the knowledge and how did brokers feel, and that did come up. And there was, not with everybody, but certainly with some of those brokers that we asked, there was a feeling of, I don't know if distrust is the right word, but the feeling that if you were to declare something to the lender, it's going to, whether they say it will or not, impact the way they view that customer and therefore impact that lending decision. And that's absolutely not what is going to happen, because that's an unintended, we don't want that unintended consequence. The regulator never wanted an unintended consequence that meant actually that customer isn't going to get the loan they wanted. It's more about obviously requiring the information to support the customer, not to say actually now we don't want to lend to that customer. So it's an interesting point, but in the research it's definitely a feeling I get that is a concern with intermediaries, brokers out there. So if we move,
and part of what the regulator has said is that it's not up to the advisor to identify in every situation. Part of this should be the customer having to disclose or volunteer some information if they want to be helped. This is a two-way street, not a one-way street.
Yeah, absolutely. So if we move on to what does the regulator expect? And firstly, understanding the target market, absolutely paramount. Ensuring that staff are skilled and capable, hugely important, and that they can recognise and respond to the needs of those customers. And when it comes to monitoring and assessing, I always say that the golden thread through consumer duty, so all that involves within consumer duty, including vulnerable customers, the golden thread as a whole is data. So with the expectations that we set out here, it's important to then always remember that we need to demonstrate the policies are in place. We need to demonstrate the outcomes of those policies and those procedures. So Rob, would you agree with that about the demonstration element? And can you talk us through any of these expectations in a bit more detail?
Yeah, I think this is goes back to seeing, not looking at these as a single entity of they're vulnerable, or these people are a little bit vulnerable, these are sort of medium vulnerable, or these are heavily vulnerable. That isn't what this is about. This is about how do you adapt your processes and practices to deal with the vulnerability of the person in front of you. So understanding the needs of that customer base in its entirety. And you have to look at this to a degree that says, in comparison to other parts of the financial services marketplace, anybody who's coming along to apply for a mortgage predominantly is in employment, holding down a job, turning up for work every day, being paid. Therefore, the elements of issue around their vulnerability will be marginal in comparison to perhaps other parts of the landscape, or perhaps where people have gone through a life event or health issues, where that will be much more when after they've got their mortgage, and it impacts in the lender in terms of perhaps the person is approaching arrears or having difficulty with their mortgage, and therefore there's a different way of looking at this. The other part of this is that how do we make sure that, from the regulator's perspective, we've trained people? How do we make sure that the staff, everybody that works in our entity, has a same level of understanding about how we want to deal with this and understand how it has to be recorded and how we might have to pass that on? And it is about this flexible service provision for me. I was talking to a lender yesterday. They were talking about a customer that they've got who is gone through some health issues, gone through some life events, bereavement, and has low resilience at the moment. So it's multifaceted in terms of how you would define them. But their core issue is that actually they're feeling very stressed about where they are at the moment. So it's not a question of what they want is, don't ring me, because if the phone rings, it makes me even more hyper and nervous. So you have to actually email them in advance to book the appointment to when you're going to ring, or get them to ring in, but they always want to talk to the same person. They don't have to re-explain themselves. They want the comfort of having consistency. So that lender has made sure that they've got that structure in place to support this customer at this point in time. That's a huge step for them to have to make, but it's about disclosure from the broker that then the lender deals with and gets you to the right place. Now that is all about demonstrating flexibility in the process for me, and then continue to validate, look, is that okay? Are we meeting your needs? Are we in a good place around this? Because it is about treating all these people as individuals with their particular issues, not seeing it as a broad brush or blanket whitewash approach to any of this.
Yeah, it's very much personal. And actually, that's a great example. That brings it to life. I think we'll bring in some more examples later of our own experiences. But I think that's great to bring an example, bring it to life, to say this is it, because these are all going to be so different. Like you just said, this isn't one thing fits all. And we've got a slide on this in a bit, which just shows the complexity of it all, a bit of a diagram that's an eye-opener. So thank you for that. So the consumer duty requirements, a reminder, obviously this is part of a wider piece of regulatory change. We've looked at what's expected, so what's required in the overall focus. So being able to demonstrate, I just spoke about it, it's so important. It links back to what I said about the data being the golden thread. But any more thoughts on the requirements? I think we might have covered some of that already. And more importantly, do we think firms are clear on these requirements at this point in time?
I think most firms, I have a view that says an advisor firm is not sustainable who doesn't actually put good consumer outcomes at the heart of their business. I think most advisors are right in that space. And I think focusing on the diverse needs of their customers, that's actually probably where they've been for some time. The challenge, I think, is how you record and demonstrate that's being met. That's the harder part, is what is that information you're going to gather? How do you build this into a knowledge bank or whatever that says, we've got this many people we're looking at in these categories, and this is how we've done it. And I think that's the harder part of being able to demonstrate that you're adapting your policies and process to deal with these issues. And it's an interesting one where I'm seeing lots of ombudsman decisions around the edges of this now, where they're beginning to take a view that says, has the firm done enough to meet the reasonable expectations of customers about how they should change? And therefore, if not enough has been done by either the advisor or the lender firm to make reasonable adaptations to policy and process, and often where the lender may have got it wrong to a degree because they've said they'll do one thing but then find they can't because of systems issues, the expectation is they're going to have to find a manual workaround to deliver it now. And that's a big challenge, I think, for everybody in the sector to think about this as not we just can't do it, but actually, if we can't do it, how do we actually make a workaround for this that makes it work for that customer in a way that's the same as other people who might not need that adaptation?
And many lenders have already done that at the front end, where the system might not have had the capability day one and might still not have the capability to record. So many lenders have adapted more of a manual approach to what do we do, and introduce
Yeah,
their own kind of form for capturing and helping brokers to capture, which
indeed.
then we can come on to later. And it's interesting to note you talk of firm. So the demonstration and the accountability is at firm level.
Indeed.
Not going to
Yeah.
come up to the individual. It's the firm is responsible.
The firm is responsible and accountable to make sure they've got the processes in place to deal with this. Individual customers then is much more a smorgasbord of, you might identify somebody who's exceptionally vulnerable, but they don't want you to amend anything because of that. They want to be treated exactly. Well, I've known for years people say, well, anybody over than 75 is vulnerable. They're not. Some 75-year-olds are exceptionally able and good and are still rocking their shit, basically.
No, I totally agree with you. No, 100%. Okay, so let's just look at these myths or facts. They've all come up at once, where I was kind of hoping that I could ask the question and bring up the answer afterwards, but that's fine. So myth, if you're a vulnerable customer, you can't make a decision. Yeah, absolutely.
Well, I think the key there is, have you given the additional information that might be needed in order to make sure it's a safe decision? And that's the caveat that sits alongside that.
Yeah, and as it says here, most vulnerable vulnerable circumstances relate to servicing needs rather than mental capacity.
Yeah.
So in fact, we need the customer's explicit consent to record them as vulnerable.
Yeah. No, we don't, because under even data protection rules, where there's a legitimate business interest, and the legitimate business interest is driven by the regulator's rules, that gives us the requirement to do that, and therefore clearly there may have to be consent for certain sensitive personal data to be passed from one party to another, and certainly there's controls under the Disability Act that means that there has to be express consent for passing certain information on. But in general terms, if it's merely how the lender or how the customer might like to be dealt with differently being passed from one party to another, that's legitimate interest usually.
Yeah, and I'd pulled out some words from the ICO that I can read them out if we think it's useful. Because this is one of when we went out and did a bit of research, I think consent is one of the confusions. What can I record? What can I share with the lender? What can't I? And I think that's a definite area for more kind of education. So just on the subject of it and looking at the ICO, what it says is that explicit consent is only required where you wish to record or process data relating to vulnerable characteristics, which would be classed as special category data, such as health conditions. For other vulnerable characteristics, such as financial data indicating an issue around resilience, explicit consent isn't required to record, process the data, and you can rely on different lawful bases, as you've already said, Rob, such as legitimate interest. Explicit consent is also not required to flag a customer as vulnerable or requiring additional support, or to record their additional support requirements involving a third-party large print document. When we say explicit, we mean consent that is clearly confirmed in words rather than by other positive actions such as ticking a box. That's what we mean by explicit consent. And that's why it's a higher threshold than standard consent.
And that's where the regulator, I think, is wanting dialogue and consent. That verbal discussion between the advisor and the customer that says, how do we help you? How do we make this better for you? How do we make sure that you get the information that you need in a way that you can absorb? That's the reality here.
Yeah. And then I did want to just add that I do appreciate that different networks may have differing rules on the capturing and the sharing. And obviously I can't comment on all of those different guidelines that they may have put out, but I thought it important to kind of read out what the actual rules are, and then your net might well have a slightly different process within that, but then hopefully they're sharing with you what that process is.
One of the challenges we've had is trying to get consensus around a lot of this, and I have to say that when I go and talk to UK Finance as the main lender trade body, it's quite difficult because they're concerned about they cover such a broad panoply of products. Mortgages are a small subset of what they deal with, and therefore they're less keen to get involved in the dialogue around this because they want to talk about this on a wider basis, and therefore are worried about some of the data controls around this particularly passing between two parties, where it's directly sitting within the banking organization itself, it's relatively easy. But when you've got this intermediated market, I think we have to have a lot more discussion over the next 12 months as to how we get better at standardizing to a degree all of these rules that are probably a little fragmented, either if I look at the lender world or in the broker world, where you're right, different firms and networks are applying slightly different standards. So we can maybe help to get a better degree of standardization, and that's a job on my to-do list.
Oh, lovely. I'm going to go to a question actually that came in already about why is not having English as a first language considered a vulnerable customer. I would start by saying I don't think it necessarily means that that's a vulnerability, but if it's not the first language and there's a struggle to understand the English, I think it's more about that. If you can't understand from the documentation or the conversations, so it's not just blanket not having English is considered a vulnerability. It could be.
I think a very practical example of that is so my stepson is living in Madrid in Spain, and he's just achieved the top mark in his class in financial analysis, and he's learning all that and having to write all this in Spanish. However, he had a major problem in his flat the other day, and of course, when the person turned up to deal with the issue, his range of vocabulary did not extend to the technical issues around a lock falling apart and being locked in the flat. The issue is not always the fact that English might not be their first language, it's how good is their English understanding to understand financial matters, as opposed to can they carry out what I would call a relatively standard communication in terms of, hello, how are you? I'm going to the shops. Dealing with the technical complexities of a mortgage and all the rules and conditions around that is a very different set of language. And therefore, you have to think about it that they might be able to talk to you in general terms about themselves, but when you get to the technical aspects, how well can they understand all of that? And that's the gap, I think, around some of the things that you have to think about. That it's not a vulnerability per se, but it's a weakness that you have to take into account to ensure consumer understanding at the end of the process.
Right. I hope that answers the question. It does. I can see that because I knew you asked the question. Another question, I think we'll go to this one as well, actually, because it's similar sort of thread. If you consider during dealing with a client that they may be vulnerable, how do you go about approaching the situation? I have a client at the moment who is struggling mental health wise as their endowment mortgage ended several months ago. Now looking at remortgaging, which is a variable, but obviously struggling without asking for assistance. So that's quite an open question, is it? About how do you actually just approach this when you know that there is a mental health issue, as this particular example?
Well, I think this is, and I don't think there's a black and white answer to this. I think this is about taking time, making sure that you've discussed all of the options with the customer, giving them time to get to the right outcome, but being really clear in your own mind what the best outcome is for that customer, because ultimately you're going to have to give the advice, make the recommendation, and make sure that the outcome is the best one possible for them. Now, doing nothing isn't the answer here.
Yes.
Therefore, doing something is better than doing nothing. And that's the part that you have to get across the bridge on, in terms of they can't make decisions because they're vulnerable. They might find that decision very difficult, but the challenge I think you have is making sure they understand that doing nothing isn't an option, therefore they have to do something. And therefore the option, it depends whether they've got capacity to still make the decision or not. But the recommendation is probably got to be simpler and clearer than you might do with another customer who is not as vulnerable, because you might paint more of the options to them. Whereas in this situation, you might have to almost take the risk that says, this is my opinion based on my knowledge of your circumstances, what is best for you.
And actually further down, which might help with this question as well, we have some examples and signposting towards the conversational methods that are out there and are really, really useful. And we've certainly used them in our own business to train.
It's about asking the customer, what can you do to help them? What is there anything else I can do? What else? Yeah. And it's that seeing them as and isolating the characteristic of what it is that's really the nub of the vulnerability, perhaps, as well. What's caused it and what's creating it.
Yeah. And And then I had lastly on here, vulnerable customers are not really my responsibility. I'm hoping that there's no one on here that would say that, but just in case there is, supporting vulnerable customers is everybody's responsibility. The advisor, the lender, everyone within that journey is responsible. So
I'm going to say this out loud. I've seen a couple of businesses that probably were pretty good at discarding customers if they felt that it was going to be a bit expensive to run with them.
right.
I've noticed a couple of those firms who've changed the way they look at things during consumer duty journey.
Yeah, that is good to hear because there's no place for that.
Yeah.
There's no place for that at all. Okay, so characteristics of vulnerability. Slide moves on. So it's important to understand that all customers are potentially at risk of becoming vulnerable. The risk is increased by the characteristics of vulnerability relating to 4 key drivers. And here are the key drivers: health, life events, resilience, and capability. There are 23 characteristics defined, as you can see here. I'm not going to run through them all. But you've got things such as learning difficulties, poor literacy. So research from the FCA suggests that 1 in 7 adults in the UK have a lower education skill than an 11-year-old. So it's quite a stark stat that perhaps before we started looking at all of this with consumer duty, we might not have realised, but certainly as a lender, we've put an awful lot of work into understanding our customer base, our target market, and how then we communicate with those customers, because the average reading age in the UK is lower than I would have imagined when we went into that research. So a lot of characteristics here as defined. Financial resilience, you could say, is taken care of within the affordability process. So you as the advisor is taking your customer through that affordability journey of understanding what they can and can't afford and taking all of their circumstances into account. And we as a lender are doing exactly the same in our affordability calculation. So that is kind of taken care of. And that's where I do wonder where a broker might be concerned that it changes our lending decision. Don't forget, our policies and our affordability calculations and all those good things are already in place to capture this. So that's where you should have the comfort that that's already built into how we underwrite a customer anyway. So a lot of these characteristics, are taken care of in there. But there's a lot here that are outside of that, and where those conversations of capturing what are the customer's needs are really important. So Rob, if you wanted to add anything to that on what your view is on brokers, lenders' responsibility and when should it be declared?
Well, this is, the issues here, is where I suppose where I started from, around the fact that people applying for mortgages at the outset or even remortgaging, they've usually still got jobs, etc., and have got a degree of such. There may be issues, life events going around the edge, and that I think back over the past in terms of clearly relationship breakdown is one. Addiction is another one, which is interesting, whether that's drugs or gambling or the same issue within the family. And I think I've seen families torn apart by children's addictions, and that's where you get into some really challenging areas where you have to think about the family unit that might be living in a house and the issues they may be having, and how you can have to think through how you help deal with that. And then there's the obvious ones around, well, retirement, bereavement, and income shock, and all things that go with that. Bereavement is normally the one that's most difficult, because you normally have a change in income levels at that bereavement level. But also the person may well have lost a partner who's their key prop in terms of decision making.
Yeah.
And therefore finding a way to help them and hold their hand through that. And it's anecdotal, but let me just say, a very long time ago, I was working as a wealth advisor. I was lucky enough to do a fair bit of work with the National Lottery, with Camelot. I remember meeting one guy who had won just over 4 million, but the guy had no financial literacy at all. He'd worked on an assembly line all his life. This was an immense amount of money, and he had no idea what to do. He'd met some very, very, how should I put it, upmarket financial advisors that the lottery normally put them in front of. And I talked to him about putting the money in 4 buckets, and he agreed that he would do the business through us. And we were at the second meeting where we were really talking the nuts about those. And he said, "What would success look like for you?" It was a really good question to ask me. I said, "Success for me will be when you ask me a really good question about why we're doing what we're doing." It was about 6 months later. He asked me a question. I sat and smiled broadly at him, and he went, "That's a good question, isn't it?" I went, Absolutely. Because the job is sometimes about educating the customer.
Mhm.
The job is about how you grow the customer. The job is about getting them on side. So this is about how do we help them understand the world we live in? Because we live in this world where we eat, breathe, drink this.
Absolutely.
They don't.
They don't.
So how
Yeah.
do we get to the point of
Mhm.
them understanding enough that they actually like the same beer or wine as us?
Yeah, absolutely. Another question, where do solicitors fit into all of this? They are a major part of the mortgage process, but don't seem to be held responsible for their manner of dealing with customers. Very interesting question. Well,
Oh,
where do we go with that one, Rob?
um, I think it's a major issue. I think at the moment where we continue to we have seen and continue to see issues with timely completion of transactions because of delays in solicitors.
Yeah.
The ombudsman is tending to blame lenders where it doesn't complete on time at the moment, so that's an interesting challenge for the lender community. Because ultimately, I think they see the lender as being the catalyst to try to force the transaction through. But unfortunately, they're regulated through a different structure. They don't have to comply with the same rules as us. But what I would say is that if a lender or an advisor is recommending a solicitor, you've got to be pretty certain that they're meeting the standards that you would expect for the customers that you're dealing with. And I think that's the challenge. Where the customer picks their own, it's fine. But if you're involved at all in the recommendation, you're actually probably caught on the hook to a degree because you've made a recommendation that firm able to do the transaction in the timescales and in the way that you think is appropriate. So your due diligence as being part of that value chain is quite important if you're in that space.
That's a really good question. I'm yeah, pleased that one came through. It's different, but
Yeah.
yeah, important, but important. Okay.
This is your favourite slide now.
My favorite side. Well, yeah, it's like a flower. But this really illustrates that vulnerabilities aren't that simple. So they can layer. One person may have several characteristics due to, let's say, a life event plus resilience as an example. So here we see those two specific characteristics represent 4.4% of the total. This is again FCA research. I've taken it from their website. And there's lots of great stuff. We can point you towards, where to go for if you want to learn more. But this is really interesting stuff because this just shows you, those buckets of vulnerabilities and characteristics where people are actually sitting. So it's interesting to see. I don't know if you had any thoughts when you saw this, Rob.
I thought was the really interesting number for me was that if people have a health issue, that health issue normally conflates into something else as well. The other ones tend to be, the number of people sitting in life event only as part of life events or as capability are much closer numbers or resilience only. The health always causes a problem with resilience or maybe a life event's caused the health issue, but there's much more confluence outside of that. And therefore, if you do get somebody who's health only, then it would almost be unusual, if that makes sense. That health issue is normally causing some other implications further across the spectrum. So I think it's a good way of looking at this in terms of understanding the complexity of those vulnerability issues and conversations. But as I keep coming back to this, and therefore it comes back to how do you define the characteristics of your particular customer and how are you going to change what you do with them? Because trying to deal with that on a macro basis or even on a program basis, it's never going to work.
Okay. Thank you for that, Rob. I was just taking a pause just to see if there were any further questions in relation to the last few slides, but we'll move on. So what are TML doing to support? So as I mentioned earlier, we did some broker research just to sense check how do brokers feel about their knowledge, how do they feel about disclosing to the lender? And like I say, we had a real mixed view. We had some nervousness from some, and some were very confident that the lender wouldn't take that information and do something, negative with it. We had some brokers say they had a lack of understanding of what lenders do with the information, and some lenders have been better at saying exactly what they do with that information. There was a view that some lenders have not done very much. That was an interesting one. I wonder if that's more about, has that lender maybe not been very clear with what they've done? I don't think it's that they haven't done enough, but have they shown enough about what they have done for the subject of vulnerable customers? You may have a view on that as well, Rob, with all the lenders that you speak to. Overall, the feedback was there were very good processes in place, apart from those that felt, some lenders hadn't done enough. But overall, good processes were in place for identifying vulnerable customers and recording them. The issue more lied with, and we've discussed it already, the actual disclosing to the lender, when do I, when don't I, what happens with it. We've also obviously fully trained our teams along the way, and Scott has led much of that, and we'll bring Scott into the conversation shortly. We've introduced the conversational methods I mentioned earlier, and I'm going to show you some of those in a minute, just to show you there's 3 of them that we've captured, and then, as I say, we can signpost you. You can go and look at further information, because there's a lot available on those conversational methods, but they're hugely useful, and I know we've found them very beneficial. And then also measuring outcomes for vulnerable customers through that data that, again, I mentioned earlier in that MI, and we have an awful lot of data that we measure, and we take into a customer committee where we look at those vulnerabilities and what does it mean. And we report very heavily on that. And of course, the additional support requirements form that we built, which is there on the screen, which is available when you are sending an application. You simply just fill out that additional form if there are those additional requirements for the customer, so we can log that on our system. From a standpoint of Amy, maybe if you want to come in with, what are Amy also doing to support brokers with this?
I mean, we're continually trying to put out our fact sheets. And in fact, I was just looking at, we've just produced, we will publish today an update blog on consumer duty, which includes stuff on vulnerable customers. Just talking to Chloe, who works with me in the team, yesterday and today, and we've decided we will now rewrite our consumer duty fact sheet based on the stuff that we've been talking about over the last couple of weeks, Sarah, because we recognise that the stuff we wrote 7-8 months ago is out of date now, because
Right.
This is the journey I think we've all been going on, and I think that in 12 months' time again we'll rewrite it again, because this is not going to stand still. It's going to evolve and change as we get better understandings and better communication. The one thing that I do notice is that I think the regulator will begin to pick off some stuff that I think they see as outliers, because what I'm seeing, talking to a range of firms, more banks, lenders, is that if you're a big bank, but you're predominantly intermediary in mortgages, you'll have almost 10 to 15 times as many customers flagged as vulnerable through their savings channel as opposed to their mortgage channel, which is really interesting.
Yeah, okay.
If that same lender, so if that same bank is predominant, has no branch network, and is only seeing customers through the lens of remote application, etc., and internet, the numbers are identical between mortgage and savings. So what you're seeing is that those people who come in face to face, we get better interaction in the savings space, but probably not in the mortgage space, because there's fear among brokers about passing that information on. What I think we also see on the other side is that where it's purely tech and tech driven predominantly, it's very hard to identify vulnerability, because you only get to this if you talk to the customer. Yeah. And therefore, this is the value that many firms will have to think through about. What is the value of face-to-face contact and advice in a world that's becoming more and more technology driven and AI driven, where actually all of that will get synthesized out. And therefore, that I think we're going to see some big challenges about the automation of everything in a world where we have to bespoke the journey for many customers.
That's a really good point. Yeah, very good point. So lots of really good, useful information from the lenders, from your trade bodies such as Amy. The support is there, and also your own firm, your network, your mortgage club. They will all have produced much in the way of guidelines and support. So just really encourage you, if you need to find out more, to look at all of those places, because it is there for you to utilise. So moving on then, if if I bring Scott into the conversation now, as I mentioned Scott earlier, who's our operations director, so been heavily involved in this and continues to be on a daily basis, because Scott kind of owns that area of an application comes through from beginning to end. Scott, can you give us some examples of where brokers have disclosed a vulnerable customer and also where we have discovered a vulnerable customer?
Absolutely, no problem at all. What I'll probably do just quickly, just before that, is to pull a few things together that will help evidence why these examples are actually quite important to us. So our overall aim as a business is to support the customer right through their full mortgage journey. So whether that's at the start of the process, the dip, the application, or when they're actually on the books after completion and looking after them in customer service and customer support. And that's really important. So the importance of us actually getting this data from you guys, the brokers, is so that we can understand how can we improve what we do to give those individuals the support they actually need. Now that is broken down. The way we break it down within operations, we split it into our people, into our process, and into our technology. So we want to understand the types of vulnerabilities that are actually out there, what is actually needed to support, so that we can then make sure we can train our people the best way so they can support the people who need it, the individuals that are actually vulnerable. We've been able to do that last year. We did it for the full operational team, and we actually did it for the full business. And this was the first time we did it, but I think it was really valuable that everybody understands vulnerability, the importance of it, and the fact there is a customer at the heart of every single thing we do. So that was massively important. The next stage was the process. When we actually hear about vulnerabilities, what we want to do is we want to look at the current processes we've got and what challenges they might actually have for certain vulnerability types. So if we know one customer's vulnerable for a certain way, whether it's a capability thing, whether it's a resilience thing, we will look at our processes and say, how can we enhance them? How can we change them so that the customer has a better customer journey and supports it exactly what they need to do? Now, the final element we look at in terms of the data we actually collect is our technology. Is our technology doing what the technology should do? Is our website given enough information that a vulnerable customer can access it? They can get support signposted to the relevant support that's actually out there, or they can get in touch with someone in as little steps as possible, because I feel that's very, very, very important in terms of what we do. What Rob alluded to in terms of things being a journey, we have started now to collect data so that we can actually look at what our customer journey actually looks like and how we can improve what we do for our people, what we do for our process, and what we do for our technology. And we've actually implemented a customer committee, and we are now actually starting to review the data to make sure we are making the changes we need to, so we can actually support all customers as well as vulnerable customers. So I wanted just to give everybody a little bit of background in terms of what we're doing as a business. In terms of the physical examples, we've got four applications that have actually been flagged during the new lending process. Only one of these was actually disclosed by an actual broker. That we had two that were actually disclosed during the underwriting process, and we had one that was actually disclosed in a regional packager's site where the actual underwriter was working very closely with the broker, and that was a really good example of working together in the best interest of the customer. The first one that we'll discuss is the broker disclosure. So we received the additional support form. That was highlighted. That was a cognitive disability, which was actually ADHD. We got a bit of background in terms of how that actually impacted the individual customer as such. And what the customer had requested when we are actually writing to them, when we're actually communicating them, that they would like things as in simple terms as possible. And their communication they preferred was actually written communication. So what we as a lender, we take a note of that, we put that in the file so that when we're communicating them right through the full mortgage journey, we know exactly how they want communicated and how that's going to best suit their needs. So that was the one broker disclosure. The next one we actually had was the broker and underwriter joint disclosure. And I felt this one was a really good example of collaboration between the broker and between the underwriter. So during the advice process, it was highlighted that the individual actually poor literacy and numeric skills in terms of understanding transactions, etc. This individual was actually a very successful businessman and actually had a joinery business and was actually doing really well, but really struggled to understand the mechanics of finance, bank accounts, etc. So he had actually requested some third-party consent for his mother to actually be added to the file, which was great. And that meant when we were actually communicating, we could communicate with her as well, and that would actually help support whatever needs he actually had as such. So that was definitely a good example. The final example that I'll bring up was we actually had an underwriter that had to reach out to one of the customers, and during the conversations, the customer highlighted that they actually had a visual impairment. So during the disclosure and the conversation, it was highlighted that could we actually get our offer documentation printed a little bit larger so that the individual could read it. That was the first time we'd actually been requested that, but it was a really good example of us understanding a vulnerability in terms of this visual impairment and us actually been able to do that. So not only did we do that at the offer stage, so that offers actually went out in that bigger print, that information is then on the file for that individual customer, and should we communicate them going forward once they're actually in the books, end of rate, etc., any other communications, we'll be able to meet their needs in terms of what they do actually require. So I think that's probably a kind of reasonable summary of some of the examples, Sarah, that we've actually seen.
That's absolutely brilliant, Scott. I think that's really brought to life. These are real life examples, and the how it got to us, but more importantly, what did we do with it? And that's what you've clearly demonstrated there. So thank you for that. They were brilliant examples. We've had a question I will go to quickly. Another really interesting one. Is there a group anywhere where we can find advisors that are able to provide advice in different languages? I have a client referral, but have been told that they do not speak English at all. So wanted to help them by directing them to a person who can help. Another really interesting question. I don't know, Rob, if you know of, you're on mute.
There are some firms around now who specialise in all sorts of different structures, whether it's Eastern European or from Asian communities. So there are all of those who, there are firms that specialise in that area who may speak different languages. Finding them is the problem. And whether you can Google search it to find a firm that is able to do that, I don't know, because I've not actually tried. But the only thing I can think of is advisor who speaks whatever language. And you may find through Google search, if they've got a good website, that you'll be able to go there and have that conversation with them. And most of the firms that I've met who are in that space are really useful and would probably fee share, etc., and may come to arrangement around that if they thought it was the right place to be.
And maybe LinkedIn as well, if you're on the LinkedIn community, that's always a really great space with your contacts that are linked to you to maybe reach out on LinkedIn and say, is there anyone there that can help? I think that's probably a good place to go as well. So just finishing on this, in terms of the data and the MI that we've talked about and Scott has talked about with our customer committee, this really will enable us to take steps to identify the outcomes for those groups and could it deviate negatively compared to other cohorts of customers. And that's what's really important to us, to understand that and to ensure that there isn't that, negativity in comparison to other customers. So something we take really seriously and are very much monitoring. Okay, so moving on then, conversational methods. I'll just quickly show you what these are. And as I say, all of this is very accessible. So you've got the Texas method, the IDEA method, and the carer method. And these are 3 conversational methods that we have adopted within our own business that, as I said earlier, we've found really beneficial for our, for our own people in how to converse with these customers. So we haven't, if we had loads of time, we could go into a lot more detail on this, but obviously conscious of time. But if you were to note these 3 down, like I say, really accessible, the FCA website, I'm sure your own, like I say, your own firms and networks will have these stored. I would hugely suggest that you go and have a look at these in more detail. Okay. So disclosure systems and monitoring from an Amy perspective. Over to you, Rob. I'll take you to the first slide on disclosure. What can we do?
I mean, I think we've talked about a lot of these issues already, and this is really reinforcing some of the stuff we've already said, which is, how do you create space to encourage an open conversation to make the customer comfortable to think about how they might want to be helped and ask about things around, are they sensitive issues that my team should be mindful of when we're working on your case? Is there anything I might need that could make the process easier for you? These are soft comfort questions, I call them. And it's a bit like, we don't want to label the customer as vulnerable. Never say to the customer vulnerable. We all travel on aeroplanes. EasyJet call it special assistance. These people are all vulnerable. Sarah knows when she's traveling with her children, she's vulnerable because they are difficult at that point when they've been cooped up in an airport for 3 hours. Then you've got this journey. They are not easy to deal with, which is why the air teams give you that, put them on first, get them in there, get them settled down. It's special assistance. It's about vulnerability, though. We should think about it the same way. Why do they let the disabled or those who are less able and children on first? Because it helps smooth the process for everybody. That's about using a different label in a way that's dealing with vulnerabilities and difficulties in a way that is acceptable. And we all got used to it and we just accept it now. In our world, we need to find a way of doing the same thing, of thinking about why do we need to know, create the space for it to happen, and then also record it in a way that makes sure they're not labeled to be vulnerable, but you're talking to them about it being in their language and in their terms. Does that help? Hopefully.
Yes. Yep, certainly does.
Try to rattle through these from a time perspective.
The
other part is making sure the customer tells us once, and making sure the people who need to do know. Having that structure, which is what is the firm's responsibility, to create the structures that allow it to be told once and then dealt with. We don't want, I've seen too often, particularly in the area of bereavement, where people get passed from pillar to post and have to repeat it again and again. There are great systems out there where people can tell somebody once and it gets fed all over financial services. But making sure that all of the stuff doesn't then get picked up in systems terms of letting letters out to dear deceased, which isn't very helpful if things go back out in these types of ways. So making sure that everything's aligned in the structures. But clearly, the other part is just be very mindful that we are now in a world, and I was talking to a lady the other day who has just got all of she's issued a DSAR against her lender and now has everything ever written or said about her by that lender on file. And that is quite an interesting process. So remember that anything you write down, anything that's recorded in a system, that customer will have sight of it if they want it.
Yeah.
And therefore, all of these things should be written down sensitively with empathy, not on a judgmental basis, if that makes sense.
Really, really good point to make there. Thank you, Rob. And I think the final slide we had there was on monitoring outcomes. So we're doing, I think, really well for time, actually. We've got about 5 minutes left. So monitoring outcomes, make improvements. Final thoughts on that, I guess.
Yeah, and I think this is about, the FCA is expecting all firms of whatever size to produce an annual report later this year. A summary of what they've done in order to improve consumer outcomes under consumer duty. And I think vulnerability for many firms should be a large part of that. So what have they done? What has the firm done to change their policies and processes? How have they done things differently for certain customers? So all the stuff that we've just talked about in the last 15 minutes is great evidence for TML of what they've done to go into their report as to how they've changed things or dealt with particular customers. And it doesn't have to be comprehensive, it doesn't be every customer, but there should be evidence for all firms about where they have taken reasonable steps to do things differently for particular individuals. And that's what the report's to do. But it's also then about what are the feedback loops of, if we've done it for them, do we need to do it for others? How do we build it into our business as usual? It's this continual improvement process that consumer duty is actually all about. And how do we use any learnings from talking to customers about even back end? You have to think about, once the customer's been through the journey that you've changed, ask them the question, did that work for you? Could we have done something better or differently? Don't see it as, I've changed that, I've done that, and I've passed it, and it's gone. The best feedback loops we ever have are our customers to say, what could we have done better or different? And, you know, even if you're getting great FIFO scores or great scores on Google, there are always things to learn and get better at. And so, and it's how you use all of those feedback loops in order to become better at the job and better at the structure. But this is about at corporate level, this is at firm level. And therefore, it's making sure that that report is written on that basis and not dropped down into individual advisors whose job it is not to do this. But they have the colour, they have the stories, they have the examples. And therefore, how you draw that out and make the outcomes about continuous improvement being the challenge.
I think that feedback is a great point. You know, asking the customer, did that work for you? Absolutely, really powerful. And I think we've got time. So there's another question here that looks very interesting, and we've got a couple of minutes left, so I'll ask it. Do you think there will be changes to shared ownership due to the introduction of consumer duty? Rob, what do you think?
So I was at a conference on consumer on shared ownership last week, and I continue to work. There's a new shared ownership council being created, which we're going to try and drag screaming all the housing associations in the UK into a standardised structure. So trying to get the London Housing Associations to communicate in any way similar to the rest of the country is a challenge in itself. But we're not downhearted. Where I think we are on this is that shared ownership is a great option for many people, particularly in a world where Help to Buy doesn't exist anymore.
Yeah.
That may come back, it may not, but shared ownership is a great option. I think the challenge under shared ownership is consumer understanding. And that, I think, means that we are going to see, I think, from Homes England, a lot more push into the broker, the advisor element, to make sure the customer understands all of the elements of what they're entering into. Now, that puts a bigger onus of responsibility on the advisor as opposed to the housing association itself. And you've got to remember, the housing association is taking the rent, but the full repair rights sit with the consumer. And also the obligation to make both the rental payment and the mortgage payment, and agreeing what percentage of ownership comes through that. Fundamentally, is that through that affordability calculator that drives that agreement, and the ability to staircase later through an advisor is fundamental. So does duty raise the bar on that? Undoubtedly it does. And I think all of us need to think about whether it's an area that somebody wants to specialise in, because I think it's becoming a bigger and bigger specialism as opposed to something that's a niche game for somebody. And therefore, people who want to be good at that area probably need to think about how they build good relationships with particular housing associations and become great at the game in that area.
It sounds like we should expect to see a lot more probably coming through on this in terms of information and guidance, perhaps.
Yeah, undoubtedly. Because Homes England are going, because they've no longer got Help to Buy, they do see this. And you also have to think about, if we have a change in government later this year, the only way that Labour are going to achieve their housing targets of 1.5 million over 5 years will be, and they've already been quite explicit as far as I'm aware, as far as I can see, that they will fund housing associations build more properties, because that's the way to get the right tenures out there in a way that works. Therefore, I can only see this be a growth area over the next 5 years if Labour come to power. Interesting.
Thank you. Right, well, I think that takes us to 12 o'clock. So I'd just like to thank everybody for joining and giving up your time this morning. We hope that you've learned something from that and it's been useful. Huge thank you to Scott for joining and talking us through those examples and what we're doing as a lender. And massive thank you to Rob for coming back again and supporting us.
Always a pleasure.
Supporting the broker community on what I think is a really important subject. And again, I think another one where we should see more and more guidance and helping that knowledge come out, because we are all talking about it. There's a bit of a gap. Let's help the community to bridge that knowledge gap, and we'll do what we can to help. So thank you, everybody. Have a good day.
Thank you. Bye.
Yeah.
Thanks for arranging this.
You're welcome.